about how the continuing demand for remote work as the pandemic drags on is impacting HPE.
Well, hi, Emily. Actually, I would like to start by saying we had an impressive quarter driven by the demand, and I'm just reading there the headline, and actually, I don't agree with the headline because we raised our forecast for the fourth consecutive quarter, which basically is driven by the momentum we have in our strategy, which is all about secure connectivity, cloud, and data insight. And this new way to work, Emily, actually has accelerated our portfolio to become that edge-to-cloud platform we have been talking for some time. So we saw very strong demand across the entire portfolio with double-digit growth in our order momentum, which allows us also to expand our margins. We did a great job in driving pricing and the right mix to deliver record-breaking gross margin and record-breaking year-to-date free cash flow. So we are very encouraged, and the momentum gave us the confidence to raise once again the forecast on both EPS and free cash flow, and we will continue to drive growth in our revenue top line here in the next few quarters and navigating through a challenge of the supply, which is obviously is going to be here for some time. But we have taken mitigating action across the inventory, and our engineering team is the best in class to swap components where is availability.
Talk to us about how you see the supply constraints playing out. I mean, do you think the chip shortage and other shortages of component parts, will that ease up by the end of the year? Is it going to be a couple more years of this?
No. We think it's here to stay for a couple of more quarters, maybe 2 to 3 quarters, and then we'll ease it up. Obviously, our suppliers are taking their own actions to increase capacity, to build new fabs. But at the same time, we are taking our own actions. And that's why all our new guidance, again, the raising the guidance, factor all this in. And so we think this is going to stay here for 2 to 3 quarters. But on the demand side, Emily, we see no impact whatsoever. In fact, the demand has never been this strong. I'm very bullish about the momentum that I think will continue into the 2022 IT spending cycle. And more customers are consuming everything we offer as a service, to your point, becoming more a subscription and consumption-driven company.
Compute shrank while Dell was able to grow there. Why do you think that happened?
Well, we actually, if you normalize for the Q3 2020 backlog, as you recall, in 2020 with the disruption of COVID, we actually shipped almost $500 million incremental revenue in Q3 2020. If you normalize for that, our compute growth would have been 17% year-over-year growth. And remember, we segment compute or the server category into 2 major segments. One is the general purpose compute, and the other one is high performance computing. And that business for us continued to hum in the way that we see in the market with the AI, deep learning, machine learning, which grew also 9%. So you have to look at our performance with a combination of both compute and HPC, and that momentum is giving us terrific growth that we are going to see in the quarters to come. And remember, we just announced a very large deal with NSA where we signed a $2 billion deal that we're going to start shipping here in the next couple of quarters.
Huge deal indeed. Let's talk about your plan to convert customers into subscribers. What makes you so optimistic you'll be able to do that?
Well, customers want a cloud experience everywhere with an elastic model, meaning pay as you go. And for that, they don't need to go always to the public cloud. We can bring the cloud to you. The cloud to you, meaning on your own premises, in your own data centers, in the co-locations or at the edge. And with our HPE Green Lake cloud offering, we are meeting those needs better than anyone else. And you can see that in our results. We added 100 customers this past quarter. We have now 1,100 customers since the beginning of this offer. Our total contract value now exceeds $5 billion. And last quarter grew 46%. And the way we report our momentum to the street is through the annualized revenue run rate, which also grew 33% and now in excess of $700 million. And we have a phenomenal pipeline. And the reason why we are winning that space is because we have the software to deliver against that experience. And Green Lake now is the alternative to the public cloud for those workloads that need to stay on-prem with big data intensive aspects associated with that.